Once you are rich, it is nearly impossible to lose your wealth. The primary way that the rich keep getting richer is through investments. But they are able to use their money and connections to invest in assets that grow much faster than the average person's. So, what type of investments are they? In this video, we investigate these alternative investments, which are generally not accessible to non-wealthy folks, and understand how easy it is for the rich to use their money to make even more money without actually doing much. We will then uncover the biggest money-making alternative investments that are available on the market today, which include some that are technically accessible to all of us, as long as you have the funds. To understand what these alternative investments are, we first have to understand what is classified as a traditional investment. Basically, a traditional investment is made on assets that are traded on a public financial market. That includes stocks, bonds, and cash. While those instruments are the foundation of our modern financial world, they are also quite boring for wealthy investors who are looking for a bit more risk and, of course, juicier returns. So, alternative investments were born. Basically, any asset that is not a stock, bond, or cash could be classified as an alternative investment. Some examples include real estate, gold, and private equity. Okay, so why do the rich want these alternative investments in their portfolio? It comes down to two factors: diversification and higher returns. Diversification is helpful because it could help reduce a portfolio's overall risk, especially if the assets are not correlated with one another. But of course, the real reason why is due to their huge potential that is sometimes 2 to 3 times greater than average returns. Due to their ability to generate extremely lucrative returns, alternative investments have grown tremendously in the last 30 years. More specifically, they are growing very quickly among the wealthy. While the average investor allocates about 5% of their portfolio to alternative investments, ultra-high net worth investors, which are individuals with a net worth of at least $30 million, now dedicate 50% of their portfolio to alternative investments. Let's look at an example of how they help the rich get richer. Princeton University manages an endowment fund currently worth $36 billion, with 48% of their portfolio allocated to alternative investments. As a result, Princeton has managed to earn an average annual return of 12% over the last 10 years. Meanwhile, the S&P 500's performance over the same time period was roughly 8%. You might be thinking, 12% is certainly better than 8%, but it doesn't seem like a huge difference. But, due to the power of compound interest, that small 4% difference each year can add up very quickly. Over 10 years, a $1 million investment in the S&P 500 would become about $2.1 million, or a gain of 116%. However, a $1 million investment through Princeton's endowment fund would turn out to be about $3.1 million, or a gain of 216%. Overall, Princeton's endowment gained an extra $11 billion just in the span of 10 years due to having the right allocation of investments. Let's look at the individual level to see how a wealthy person keeps getting richer with the help of alternative investments. Our example today is Olivia. She is a software engineer in Silicon Valley and has built her net worth up to $2 million. Let's say she invests all her money into a mix of traditional investments like stocks and bonds, so she receives a conservative 5% return each year. That means her portfolio generates $100,000 every year just from asset appreciation. That also means she could spend $100K each year and still preserve her original $2 million. But let's say Olivia becomes a bit more daring and invests in some alternative investments. Now her annual returns are 12%, which would be $240,000 each year. If she spends the same $100,000 as she used to, then she would now be making an extra $140,000 every year just from interest. Thanks to compound interest, her original $2 million would then grow to almost $4 million over the next 10 years, even as she spends $100,000 each year. You can quickly see how, if they are prudent with their spending, the rich will only get richer. You can learn more about the true scale of wealth in our other video, which reveals how much things actually cost for the ultra-rich. But now, let's find out exactly what type of alternative investments they are making. A growing category of alternative investments is the collectibles market, which includes items of value like art, watches, and even handbags. One of the highest performing collectibles are cars. If you hold on to the right model, a vintage car can actually appreciate in value over time, which is the complete opposite of a regular car's value. In fact, over the last 10 years, the average classic car went up 8% in value each year. Although that is similar to the S&P 500's performance, cars are the only asset on this list that you can actually use and enjoy a bit. Another highly appreciating class of collectibles is alcohol. Investments in fine wine, either through the purchase of actual bottles or through a fund, have yielded 10% annually in the past 10 years. Even more impressive, investments in rare whiskeys have generated 16% each year over the last 10 years. So, how can you benefit from these type of investments? Well, you just need to pony up enough cash to buy these rare items. The cheapest collectible Porsche that was sold at Sotheby's latest auction still netted $180,000, while the most valuable bottles of whiskey sell for well over $100,000 each. One of the most popular alternative investments are through funds. These managed pools of money include hedge funds, private equity, and venture capital. While hedge funds have been underperforming for quite some time, private equity firms have been red hot, with an average annual return of 15% over the past 10 years. Even more impressive is the success of venture capital investments, which have enjoyed an annual growth of 18% in the last decade. So, what's the catch? Well, these type of funds are usually only open to institutions and accredited investors. To become an accredited investor in the US, you must have a net worth of at least $1 million or have an annual income of at least $200,000. Passing this requirement will then grant you the opportunity to buy securities that are not registered with the Securities and Exchange Commission. An emerging alternative asset that is well known by now is cryptocurrencies. Crypto, most notably Bitcoin, rose to mainstream prominence in the mid-2010s and exploded in popularity and value by the 2020s. That value sent the price of a coin from 11 cents in 2011 to an eventual high of $66,000 by 2021. That makes Bitcoin's current annual rate of return a staggering 75% per year in the last 10 years. While those figures are quite impressive, the crypto market is still in its infancy and will require more time to determine if it is truly a reliable place for alternative investments. But it is the only asset on this list that virtually everyone has access to and offers full transparency too. That is probably why it has become so popular with the working class as well. The most lucrative alternative investment is in sports. The value of professional sports teams have skyrocketed recently, and franchises have become one of the most sought-after assets in the world. Professional basketball teams in the US have witnessed their franchise values grow by 17% each year over the past 10 years. Football has also been a hot investment lately as well. The NFL has seen the value of their franchises increase by 12% per year over the last decade. The most shocking tale of growth is the NFL's Chicago Bears franchise. George Halas purchased the team for $100 in 1921. Today, they are worth $6 billion, which represents a 19% return per year over 102 years, or a total return of 5.99 billion%. The value of every sports franchise seems to also be rising even faster lately. According to Forbes' latest study in 2022, the 50 most valuable sports teams have risen an average of 30% in value just in the past year. We wrote up an in-depth explanation in our newsletter of why exactly sports teams have become so valuable. You can sign up for free through this link or in the description below. Alright, so how do you invest in sports teams? Well, you probably can't. There are only 124 professional teams in the US, so it is already a rare commodity among the elite who are looking to buy a team. There are also strict bylaws for potential owners based on their financial history. So not only do you need to be rich, but you need to have a strong business record and be well connected if you want to buy a team. So, just like most high-yield alternative investments, sports franchises are off limits to the common folk and are there instead to serve the already wealthy. What do you think about alternative investments? Let us know your next investment moves in the comments below, and please like this video and subscribe to our channel to learn more. As always, thanks for watching.